welcome to Markets Today. I'm Lata Venkatesh, and joining from the Delhi News Centre is Surabhi Upadhyay. It was a good day if you were a bull in the market. It's the sixth consecutive day that stocks have technically ended higher, and it smelled like the pre-budget rally is just gaining strength. At least in the mid-cap space, you saw a bunch of defence and railway stocks going up, quite clearly pre-budget candidates. Hi, Surabhi.
Hi Lata, yes, second half of today turning out to be quite good for the markets. Let's quickly run through the top stories. Shares climb for the sixth consecutive day, led by buying in power, capital goods and IT shares. The Nifty climbs 1%, ending just below the 8,900 mark. The Sensex closes in on 29,400. Mid-caps underperform blue chips, but that index also ends up 0.7% higher.
Hero Motors slumps more than 5% after the promoters sell 3.5% stake in multiple blocks. The deals took place slightly below the prevailing market price. The money raised is to be invested in newer businesses, the promoters said.
Defence stocks like BEL, Pipavav Defence and Astra Micro have surged between 9 to 17% as the Prime Minister emphasises that the focus on indigenous defence production is a core and is part of his Make in India strategy.
Suzlon puts on another 16% on continued excitement over the equity infusion by Dilip Sangvi Family and Associates. Hopes of budget sops for the renewable sector also helps. Well, those were some of the headlines from the market, and here are the experts that we have lined up on the show for you. Editor and publisher Mark Farber will give us his outlook for India and other asset markets. Dipen Seth of HDFC Securities talks about fund flows and picks up actually some multi-baggers. Sudarshan Sukhani is joining in with some trading ideas.
Well, that's all that's lined up for you in terms of more opinion that's coming your way. But let's first talk about the day itself and really how the action played out. The bulls are back in complete control on Dalal Street, and new records don't seem too far away. Anuj Singhal is now joining in with details of the day's trading highlights. Anuj.
Well, looks like the market is in a mood to have a rally up until budget, and all-time highs. It's only a matter of timing really, and for all practical purposes, the market is at an all-time high. Now, if you talk about today's trade, high beta stocks surged in trade, and that's been the case for last many days. So traders are making a lot of money, and today in particular, the sector that stood out was defense. Anything related to defense was going up. Let's talk about the stocks then. First, the winners, because it was a green day. So you had big gainers in stocks like HDFC, Tata Motors, ICICI Bank. So the heavyweights were really putting their weights behind the market in terms of gains today. Some other stocks which looked good. IT in particular has been showing signs of leadership this year. All the IT names are up quite a bit, 10 to 20% this year. So stocks like HCL Tech, TCS, Wipro, they were all higher, 1 to 2% in today's trade. The other sector that's been having a secular run is cement. All the stocks up 17 to 18% this year. So ACC, Ambuja, Ultratech, all of them again up between 1 to 2%. On the losing side, Hero MotoCorp, of course, was the top loser. Promoters sold stake in a block deal, and that stock was down 5%. Metals had a bad day. NMDC was down about 4%, and ONGC was down 2%. Now, let's talk about some defense-related stocks which did well in trade today. Pipavav Defense was up 12%. Astra Microwave was up 16%, and Rolta was up about 8% or so. And some other prominent mid-cap winners. Actually, this list is very long. Just selected 3 names in terms of trading volumes. So HOEC was up 20%. Suzlon for second day running had big gains, and GVK Power was up about 9%. So a bit of resistance maybe now between 8,900 towards the all-time highs of around 8,996 is something that you can expect. But bulls believe that it's really a matter of when and not if the market will hit a new high.
All right. I might just point out some of the pockets that were worried today. Clearly metals. Anuj mentioned that in passing. He spoke about NMDC. But actually you can go on. I mean, NMDC, Sesa Sterlite, Hindustan Zinc, even Tata Steel. Hindalco just kind of missed getting flogged. A lot of the mid-cap steel names like Sunflags and Bhushan's and Monets, all these also were a little under the weather. And that's because of a double whammy that appears to be striking some of these companies at least. All of them are buying a lot paying a lot more to buy coal, as the aggressive bidding in the coal auctions indicate. And it is extremely unlikely that they will be able to pass on these prices to the end buyers, because the landed price of steel and aluminum are all indicating that prices, if anything, are falling, and falling rather rapidly. So there is a big crunch coming for some of the metal stocks, to be sure, and therefore a spot of bother there. Power stocks have escaped the blushes today. In fact, we saw actually Tata Power and stocks like that among the gainers. But it's quite possible that there will be some bit of investor ennui and worry about the power stocks as well, given the aggression with which people have bid at the coal auctions.
Okay, that's the day's market action. Let's move to some opinion now. Bipin Sheth, head of institutional research at HDFC Securities, says he's constructive on the Indian markets, and big money has started now flowing into domestic mutual funds.
The good news is that big money has started flowing into domestic mutual funds, and that should mitigate, if not manage, a large exit should it happen for a while. The FIIs. I'm constructive. I'm not really. So there's also this side theory on, that the 3Q numbers have been uninspiring, and there's a year-on-year decline and at the aggregate level, people put together performances of companies, and it's not important where you are. It's very important where you're going, especially when where you're going has been so brilliantly been redefined. So I'm not too worried about the 3Q let-off. These are not secular businesses. These are deep cyclicals, and in fact, there is a structural shift which is being unleashed right now. So if you look at a Bharat Electronics, again, we don't have them under coverage. You look at an Astra Micro or something like that. A Pipavav Defense, these businesses can grow 5x, 6x in the next 2-3 years if things play out to their advantage. We don't understand these businesses, which is why we don't have them under coverage. But I would take the point that we really need to dig very, very deep into some of these.
All right, and that explains why the defense stocks were up and about. Should something happen, 5 to 6 times is what people are expecting growth in those sectors. But for the moment, let's get to the futures and options space. Nigel is waiting by for a wrap.
So just looking at the options data, the range for the Nifty is roughly around that 8,700 to around the 9,000 mark. Individual strikes that one focused today and that were fairly active were the 8,800 put as well as the 8,700 put. The premiums on both those two strikes fell more than 20-25% in today's trade, indicating there is writing over there, and the Nifty should find support at around that 8,700 odd mark. On the upside as well, we did see a fair bit of action at around that 9,000 call. There's a mix of activity happening over there. The premium today moved from around the 37 mark to around 41 rupees approximately by the time we wound up. Now there are some traders that are going out there taking a bit of a punt, buying that particular strike for around 37 bucks and hoping the Nifty will expire above that 9,040 odd mark. But there is some writing as well being seen at that particular level, and if you look at it, the 8,700 call as well did see a fair bit of action today. The premium over there moved from around 60 rupees to around 79 rupees, so that's telling you that selling pressure should come in at around that 8,970, 8,980 odd mark. Individual stocks that one focused today. Remember, the Nifty ended higher by close to around 50 points. So we saw a couple of stocks that came in for a short covering bounce. ICICI Bank as well as HDFC, both of them have good weightage on the Nifty. Both of them did come in for a short covering bounce in trade today. While Hero MotoCorp, the stock was getting sold into, and take a look at the open interest build up. The open interest was higher by more than 80%. That's telling you that fresh shorts were getting built into the system on that particular counter. Ashok Leyland, it has been a big winner in the last couple of years, in fact. But that one as well did see renewed buying in trade today. Big spike in the open interest as well over there. JP Associates, normally a shorting candidate. Today, in fact, it came in for a short covering bounce, while Hexaware as well from the mid-cap IT space, that one did see big buying.
Nigel, before we let you go, let's also talk about the coal block auctions. It's been day 5. Aggressive bidding continues, and the appetite for these mines remains pretty strong. Give us your sense and your analysis.
Well, in the last few days, we've seen very, very aggressive bids taking place in that coal auction that's playing out. So there is a split verdict. Some traders, in fact, they believe that at least some companies are securing their coal, while others believe that the prices are way too aggressive. Take Cessna Sterlite's Balco, for example. They won the Chotia coal block for around 3,025 rupees. The previous owner, remember, was Prakash Industries. So that stock ended lower by more than 3% approximately. The total reserves that are available in this particular block is at around 20 25 to around 26 million tons odd. And remember, on a year-to-year basis, they can extract only 1 million tons odd. Now, BALCO's total requirement for the year is 7 to 8 million tons. So they've secured themselves with only around 10 to around 15% of their total coal requirement. Now, the block is nearly around 70 to 80 kilometers away from BALCO's plant. So that's telling you that, in fact, just taking a rough calculation of around 2 rupees per kilometer per ton, then they'll be spending around 150 rupees in excess to around this 3,025 rupees. The landed cost at BALCO's plants will be closer towards 3,800 rupees per ton. You compare that with Coal India's e-auction as well as FSA prices, and you'll see that, in fact, it's at a significant premium to those prices. So in short, the market wasn't very happy. They believed that the bids were too aggressive, and that's why that stock ended at the day's low. It was down more than 2.5%. On the flip side, though, a smaller manufacturer, that's OCL Iron and Steel, they went ahead and they won a coal block in West Bengal. Now, that's the Ardagram coal block. Remember, the total reserves were there as well, only around 26 million tons. And on a per annum basis, you can extract only around 0.4 million tons. The price that they secured this particular bid and they won this particular bid was 75% higher than what the floor price was. Remember, they have their DRI plant in Odisha itself, and that's a good 450 kilometers away from this particular block. But nonetheless, the market was happy that a small manufacturer, they've gone ahead and secured some part of their raw material. That's why, in fact, the stock was higher, but close to around 15-20% by the time we wound up.
Thanks a lot for all those details, Nigel. The market is still groping for perspective. Should it be happy with stocks that they have secured at least a small portion of their coal needs? Or should it be worried that the coal is now getting priced much more? The raw materials are expensive precisely at a time metal prices globally are falling. So there is some near-term pain that these stocks will have to bear. But more on that in the days to come. For the moment, let's concentrate on the big boy, Hero Moto. It slumped more than 5% after a block deal in which the promoters sold 3.5% stake in the company. Sonia Shenoy joins in with what she has made of that deal. Tell us, Sonia.
Well, Hero Moto was the biggest loser on the index today after the promoters decided to sell 3.5% of their own personal stake in the company at a discount to the current market price on Monday. They did the stake sale at a price of 2,664 to about 2,718 rupees a share. It's interesting because this is the first time that the Hero Moto promoters have sold their stake. Earlier, remember, we did see stake sales come in from the private equity players like Bain and GIC, etc. But this time the promoters have gone ahead and offloaded stake. They did mention that the funds that will be raised will be used to invest into new businesses, and many reports suggest that they are looking at lucrative opportunities in the defense sector. In fact, their name is in the fray for buying the assets from Pipavav of Defense as well, but all of that, of course, is speculative until confirmed. A lot of analysts have been raising question marks as to what the promoters' intentions are. Of course, it will not impact the listed entity, but the question is, why did the promoters have to sell the stake at a discount to the current market price? So that raises a bit of nervousness as well. Back to you.
Right, Sonia, thanks so much for that. So that's all that was moving in the markets. Let's get you some global opinion now. Mark Farber, editor and publisher of the Gloom, Boom and Doom report, says that valuations for Indian stocks are no longer compelling.
I think in general the economy is okay. It's not going gangbusters, but it's okay. And in the meantime, the share market has gone up a lot over the last 12 months. And the valuations are, in most cases, no longer terribly compelling. I just looked at Nestle India. It's selling at close to 50 times earnings. So, everything has to move in the right direction to justify these valuations.
Right, that was an interesting opinion as well on crude and gold from Mark Farber. We'll take a break on that note, but coming up after the break, Sudarshan Sukhani will join in with some trading ideas. We will also get you ideas from some F&O experts.
Aditya Birla Group presents Budget 2015, the Make in India Budget.